These 7 Canadian stocks are on my radar for 2024. You might be aware of some of them and some might be surprising to you, or you might not have discovered them yet. So let's dive in no particular order. So the 7th company which is on my watch list is Colliers with the ticker symbol CIGI.TO. It is currently trading at around 150 Canadian dollars. So Colliers is a real estate services and investment management company. In the past 1.5 years, the real estate sector has been mostly affected by higher interest rates as the cost of debt is very high. Therefore, in the case of anticipated rate cuts, REITs and companies in the real estate sectors are expected to benefit. And one such company could be Colliers. As mentioned, it's currently trading at 150 Canadian dollars and I am planning to wait for its quarterly earnings on February 8th, 2024. If the stock is down after the earnings, I'll consider entering at a price lower than 150. In addition to real estate brokerage commissions, positives for Colliers include diversifying their business by entering property management and real estate consulting. I suggest waiting for the stock to dip a bit for potential higher capital gains. So the next company is one I have been buying throughout 2023 and I plan to acquire more of in 2024. Its current dividend yield is close to 6%, making it an appealing choice for the income investors as well. And the stock is one of the telecom operators in Canada, TELUS, with the ticker symbol T.TO. It is currently trading around 24.6 Canadian dollars, experiencing a 14% decline from January 2023. The valuation seems attractive at this point, earning its place on my radar for 2024. With speculations of rate cuts in 2024, telecoms including TELUS are expected to benefit because, as we know, telecom operate in a capital intensive environment relying on debt to finance their operations. So when the interest rates are high, the cost of financing rises, as reflected in the stock's decline last year. So the combination of 6% dividend yield and the opportunity to participate in companies' growth at this point makes it a very compelling option. The 5th company I want to talk about has a near monopoly in Canada, capturing 90% of the market. It has a long-term contracts with major customers like Amazon, DHL, UPS, Purolator, Canada Post and many more. Limited competition and high barriers to entry make this company very attractive. And the company is Cargojet with the ticker symbol CJT.TO. So what this company do? So if you have ever ordered from Amazon USA, UPS, DHL, Purolator or Canada Post and received the package in one day in Canada, then it's likely because of this company. Basically, Cargojet provides time-sensitive overnight cargo services within Canada, USA and some international destinations as well. So currently it's trading around 120 Canadian dollars. I would wait for some corrections in the price before getting in. The dividend yield for the stock is 1% and the payout ratio is around 30%, which is well covered. Their recent move to pause capital expenditure and optimize the existing fleets in the soft economic situation shows the management is good at what they are doing. So the next and the 4th stock is again for the income investors with the growth opportunities in the near future, especially if we see some interest rate cuts. So the dividend yield of this stock is around 6.5% and it's down approximately 15% from its 52-week high. The stock I am talking about is the Bank of Nova Scotia, ticker symbol BNS.TO. Currently it's trading around 62 Canadian dollars. Some of you might be worried about the banking sector in Canada due to the potential risk of mortgage defaults, but in my opinion, Canadian banks survived the 2008 crisis, and I believe they would weather it again. Because this opportunity to invest in the banking sector at this fair valuation in general is not very common. The price to book value of this stock is around 2.2, which in my opinion is fair. So along with a 6.5% dividend and the opportunity to participate in value growth makes it very much on my radar. So the next company on my watch list is globally diversified financial holding company engaged in insurance, reinsurance and investment management. The most compelling point for me about this company is that it's trading very close to its book value with a price to book ratio of 1.15. The company is Fairfax Financial Holdings and its ticker symbol is FFH.TO. It's currently trading around 1300 Canadian dollars, which I believe may not be an ideal entry point for me. However, I'll keep it on my list, and a good correction in the stock price would definitely make it worth considering. So the second stock is something which aligns with my long-term strategy of investing in companies which has the proven track record, and the company I'm talking about is Canadian National Railways with the ticker symbol of CNR.TO. It's currently trading at around 170 Canadian dollars. I would definitely wait for some correction at this level before considering an entry. The company's balance sheet is quite robust, and with an improved economic outlook, it is poised for the growth. As we know, CNR has a well-established moat in North American market. While the dividend yield is not exceptionally high at 1.8%, it is expected to grow over time as the company grows. So the first stock on my list is a company that is my personal favorite and a major holding in my portfolio. The reason why I like this company is because it shows consistent revenue growth year over year. It is a profitable company with very good net income. It maintains the strong positive cash flow. It has a global reach in around 25 countries and has a great industry position. And the last and the very important one is it has a strong management. And the company I'm talking about is ATDB. It is currently trading around 81.7 Canadian dollars. So it is a convenience store chain primarily operating in North America, Europe and Asia, offering a diverse range of products including fuel, snacks, drinks and basic groceries. They have a total of 14,425 stores in 25 countries, serving 8.5 million customers per day. To provide a perspective, they serve a quarter of Canada's population every day. Their business strategy for expanding their store network involves acquiring small convenience stores and gas station chains, along with opening the new stores. The company significantly outperforms the S&P TSX 60 index. As mentioned, its revenue and net earnings are growing year over year and appear to increase in the future. So don't think twice and invest in great companies like ATD whenever you see a price correction. Thank you for watching this video. If you like my content, please do like, share and subscribe the channel. If you have any questions, feel free to ask me in the comment section. This video is just for an educational purposes and please do not consider it as a financial advice.